Watch what they do, not what they say. For 10 years, the US government waged a war on crypto. They called it rat poison. They launched Operation Choke Point. They sued every major exchange. But in late 2024 and 2025, the guns fell silent. Instead of bans, we got ETFs. Instead of lawsuits, we got legislation. Why the sudden change of heart? Did they suddenly fall in love with freedom? No, they realized they were losing the game. The smart money knows the truth. The US government isn't embracing crypto to be nice. They are embracing it to survive. They have realized that in a world where BRICS nations are hoarding gold, episode 22, the US needs a countermove. They cannot out-hoard China in physical gold, but they can dominate the digital gold. We are witnessing the birth of the strategic Bitcoin reserve. The US is pivoting from fighting the future to owning it. To understand this pivot, you have to look at the geopolitical chessboard. As we discussed in episode 22, the BRICS nations, China, Russia, are betting on physics. They are hoarding gold, silver, oil, and copper. They want a currency backed by atoms. The US cannot win that game. We sold our gold. We outsourced our industry. So the US is betting on mathematics. They are betting on Bitcoin, artificial intelligence, and code. Bitcoin is the only asset in the world that is as scarce as gold, but moves at the speed of the internet. By capturing the Bitcoin network, the US creates a digital Fort Knox. If the dollar fails, they have a lifeboat. But more importantly, if they control the dominant digital asset, they control the rails of the future economy. It is a classic asymmetric bet. Use your strength, tech software, to negate their strength, resources, hardware. But Bitcoin is only half the strategy. The other half is the stablecoin. Stablecoins like USD Tether and USDC are tokens pegged to the dollar. Critics say crypto kills the dollar. The smart money says crypto is saving the dollar. Here is the mechanism. To issue a stablecoin, the company must hold reserves. What do they hold? US Treasury bills. Tether is now one of the top 15 buyers of US government debt in the world. They buy more debt than Germany. Stablecoins create a permanent, automated buyer for US debt. Furthermore, they export the dollar to the global south. People in Argentina, Nigeria, and Turkey aren't buying yuan. They are buying USDT. They are using crypto rails to dollarize their economies. The US government realized that if they ban stablecoins, they kill the demand for their own debt. So the strategy shifted. Don't ban them. Regulate them. Bring them inside the tent. Stablecoins are the new petrodollar. The idea of a strategic Bitcoin reserve sounded crazy 2 years ago. Now it is legislation. The proposal is simple. The US Department of Justice already holds roughly 200,000 Bitcoins seized from criminals, Silk Road, Bitfinex. Historically, they auctioned this off. They sold it. The new policy is HODL, stop selling, keep it, then start buying. The plan aims to accumulate 1 million Bitcoin, roughly 5% of the total supply, over 5 years. This serves two purposes. It removes supply from the market, squeezing the price up, enriching US holders. It prevents China or Russia from cornering the market first. It is the 21st century version of the Louisiana Purchase, buying a massive asset before everyone realizes how valuable it is. The third pillar of the strategy is mining. China banned Bitcoin mining in 2021. This was their strategic error. The US welcomed the miners. Texas is now the mining capital of the world. Why does the government want mining? Because miners stabilize the energy grid. They are flexible load. They turn off when demand is high and turn on when demand is low. But more importantly, hash rate is national security. The country with the most miners secures the network. If the US controls 50% of the hash rate, they can censor transactions via OFAC compliance. They can control the protocol. They are turning Bitcoin from a neutral money into a Western money. The smart money is investing in US-based miners because they know these companies will eventually be designated as critical infrastructure. What happens when the biggest whale in the world enters the market? We saw what happened when BlackRock entered the ETF. Bitcoin went to $73,000. Imagine what happens when the US Treasury enters. If the Strategic Reserve Act passes, the US government becomes a price-insensitive buyer. They will buy billions every month. Other nations, Saudi Arabia, Japan, UK, will have to front-run the US. They cannot afford to be left with zero Bitcoin if the US is hoarding it. This triggers a sovereign FOMO race. Game theory dictates that the first nation to buy wins and the last nation to buy goes broke. The smart money is buying now because they know the sovereigns are coming later. Is this good for Bitcoin? For the price? Yes. For the ethos? Maybe not. Bitcoin was created to be decentralized, to be money without a master. If the US government holds a huge reserve, controls the miners, and regulates the stablecoins, have they captured Bitcoin? There is a risk that we end up with a two-tier crypto system. Tier 1, whitelisted Bitcoin. Clean, KYC'd, held by BlackRock and the US government. High value. Tier 2, dark Bitcoin. Held on private wallets, mixed, used by enemies. Illegal or discounted. The war on cash, episode 009, might just morph into the war on private crypto. They will love the asset, number go up, but hate the privacy, freedom. Expect the price to rise, but the regulations to tighten. Let's summarize the investigation. The US has stopped fighting crypto and started accumulating it. The smart money playbook. 1. Don't fight the Fed. If the US government decides to pump Bitcoin, it will go up. Align your portfolio with the sovereign bid. 2. Own the asset, not the proxy. While miners and Coinbase are good trades, the strategic reserve is buying the asset. Owning BTC directly is the safest play. 3. Watch the stablecoins. The growth of USDC Tether is the growth of the US dollar empire. This prolongs the life of the dollar, delaying the crash. 4. Keep a cold stash. Hedge the centralization risk by keeping some coins in self-custody, hardware wallet. If they create a whitelist, you want to control your own keys. The empire strikes back, but this time it is buying. This is the smart money wisdoms. The future belongs to the owners.